Wednesday alert. Silver breaks out. Next 24 hours will shock you. Something just broke. Not a stock, not a bond, not a currency. Silver. And if you're watching this on Wednesday, you may have woken up to a market that just quietly crossed a line that most investors won't even notice until it's too late. This is not a drill. This is not hype. This is a pattern that has played out before, and every single time it did, the people who understood it early walked away changed. The people who ignored it, they watched from the sidelines, wondering what just happened. Stay with me, because the next 24 hours in silver may be some of the most important hours this metal has seen in years. Here's what we're going to cover today. We're going to look at exactly what just happened in the silver market this Wednesday, what the charts are showing, what the fundamentals are screaming, and what the smart money has been quietly positioning for while everyone else was distracted by headlines about tech stocks and interest rates. By the end of this video, you're going to understand why silver doesn't move the way people think it moves. You're going to understand the mechanism, the actual machinery underneath this market that makes breakouts like this one either a false alarm or the beginning of something much, much larger. Most investors get silver completely wrong. They treat it like a shiny rock that goes up when the Fed pivots. That's not the full picture. That's actually a dangerously incomplete picture. And today, we're going to fix that. Because right now, in mid-2026, we have a convergence of factors that doesn't happen often. In fact, the last time we saw this kind of alignment, the consequences were historic. Let's get into it. Section 1. What just happened? Let's start with the raw reality of what's happening this week. Silver has been building pressure for months, not quietly, loudly, if you knew where to listen. Every pullback has been bought. Every dip has found support at levels that told a story of accumulation, a story of institutional interest quietly building beneath the surface. And then, this Wednesday, something shifted. The price action we're seeing isn't random. Markets don't move randomly when the macro environment is this loaded. When silver breaks out in this kind of environment, on a Wednesday, midweek, with no obvious headline catalyst, that's actually one of the most powerful signals you can get. Because it means the move isn't being driven by a single news event. It's being driven by something deeper. It's being driven by the math. And here's what the math looks like right now. Silver's supply deficit, the gap between how much silver the world is mining and how much the world is actually consuming, is at levels we haven't seen in decades. The Silver Institute's data has been flashing red for 2 years running. We are consuming more silver than we are producing, every single year. Think about what that means. We are drawing down above-ground stockpiles to meet industrial demand. And that industrial demand? It's not slowing down. It's accelerating. Section 2. The industrial demand story. Here's where most people's silver thesis falls apart. Because they're still thinking of silver as just a monetary metal. Something you buy when you're scared of inflation. A hedge. A safe haven. That's part of the story, but it's the smaller part. The bigger part, the part that is reshaping the entire supply and demand equation, is industrial. Solar panels. Every single solar panel on Earth uses silver. And right now, in 2026, the solar installation rate globally is breaking records. Country after country, from Europe to Southeast Asia to the Middle East, is racing to build out solar infrastructure. Not slowly, rapidly, urgently. Because energy security is now a national security issue. Each gigawatt of solar capacity requires a significant amount of silver. We're talking about millions of ounces, and we are building gigawatts at a pace that wasn't imaginable 5 years ago. Then there's the EV revolution. Electric vehicles use silver in their electrical systems, their circuit boards, their battery management systems. As EV adoption scales, and it is scaling, the silver demand that comes with it scales too. And then, and this is the one that keeps analysts up at night, artificial intelligence infrastructure. The data centers being built right now to power the AI economy require enormous amounts of conductive materials. Silver is the most electrically conductive metal on Earth. There is no substitute that performs at the same level. None. So you have a world that is simultaneously electrifying its energy grid, electrifying its transportation system, and building a digital intelligence layer on top of everything, all of which requires silver. And the mines, they're not keeping up. They cannot keep up. Opening a new silver mine takes years, a decade in some cases. The capital hasn't been there, the permitting hasn't been there, the geological reality hasn't been there. So we have a demand curve that is bending sharply upward, and a supply curve that is essentially flat, maybe slightly declining. That is not a subtle imbalance, that is a structural collision. Section 3, the macro environment. Now let's layer in the macro picture, because silver doesn't exist in a vacuum. It exists inside a global financial system, and that system is under stress in ways that most mainstream commentators are not being fully honest about. Let's talk about the US dollar. The dollar has been the world's reserve currency for the better part of a century. That status has given the United States an extraordinary privilege, the ability to borrow essentially without limit in its own currency because the world needs dollars to buy oil, to settle trade, to hold in reserves. But that privilege is being quietly, systematically challenged. The BRICS bloc, Brazil, Russia, India, China, South Africa, and the growing list of nations now joining or aligning with that grouping, has been actively working to reduce dollar dependency in trade. We've seen bilateral trade agreements settled in local currencies. We've seen central banks, dozens of them, quietly reducing their dollar reserve holdings and increasing their gold holdings. When central banks buy gold, and they've been buying gold at record rates, they are making a statement. They are saying, we want assets that no government can print and no government can sanction away. Real assets, hard assets. Silver sits directly in that category. Now add the Federal Reserve situation. In 2026, the Fed is navigating one of the most complex monetary policy environments in modern history. Inflation that proves stickier than the models predicted. A federal debt load that is mathematically concerning. We are spending hundreds of billions of dollars every year just on interest payments. Not on defense, not on healthcare, just on the interest on the debt we've already accumulated. When a government is spending that much just to service its debt, it faces a painful choice. It can raise taxes dramatically and crush economic growth. It can cut spending dramatically and face political backlash. Or, and this is historically the path of least resistance, it can inflate the debt away. Allow inflation to run just high enough, long enough, that the real value of that debt shrinks over time. Every one of those outcomes is bullish for hard assets. Every single one. Section 4. The smart money signal. Now here's where it gets interesting. Most retail investors are not watching the COMEX positioning data. Most retail investors are not reading the commitment of traders reports. Most retail investors are reacting to price. They buy when silver is already up, and they panic when it pulls back. But the smart money, the institutional players, the managed money funds, the entities that move billions, they position before the move, not during it, before it. And what we've been seeing in the positioning data over recent weeks, quietly, without fanfare, is accumulation. Managed money has been building long positions while the retail crowd has been uncertain. Commercial traders have been covering shorts. That is a setup, a real one. When you see managed money accumulating and commercials covering, and then you see a Wednesday breakout with volume confirmation, that is not noise, that is signal. Think about how silver has behaved historically in environments like this one. In periods of dollar weakness, combined with industrial demand acceleration, combined with institutional accumulation, silver has not moved modestly. It has moved violently. It has moved in ways that shocked even the people who were bullish on it. The 1970s stagflation era. The 2010 to 2011 run. These were moments when silver didn't just go up, it went parabolic. When the conditions aligned and the positioning was right and the macro backdrop was supportive, silver became one of the most explosive assets on the planet. We're not saying that's guaranteed here. We never say guaranteed. But if these conditions continue, if the dollar continues to weaken, if the industrial demand story continues to unfold, as the data suggests, if the supply deficit continues to deepen, the math begins pointing towards something significant. The question is, will you be positioned before it happens? Or will you be watching from the sidelines, wondering how you missed it? Section 5. The gold-silver ratio. Let's talk about one of the most overlooked metrics in the precious metals world, the gold-silver ratio. This ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, going back centuries, this ratio has averaged somewhere between 15 and 20 to 1. That's actually close to the ratio in which these metals exist in the Earth's crust. Right now, that ratio is dramatically elevated. Silver is historically cheap relative to gold on this measure, And every time this ratio has stretched to extreme levels and then begun to compress, silver has outperformed gold significantly on the way back toward historical norms. This is not a small thing. This is one of the oldest and most reliable mean reversion signals in the commodity world. When institutional money rotates from gold into silver, when the ratio starts compressing, silver doesn't just keep pace with gold, it runs circles around it. Because silver is a smaller market, because silver has that industrial demand kicker that gold doesn't have, because when money moves into silver, the impact on price is amplified. Right now, gold has been on an extraordinary run, and that's meaningful because historically, silver follows gold with a lag. Gold leads, silver catches up, and then overshoots. We may be at exactly the moment where that dynamic is beginning to play out. Section 6. The risk picture. Now, and I want to be clear about this, none of this is financial advice. What we're doing here is analysing the macro environment, the supply and demand fundamentals, and the historical patterns. You make your own decisions based on your own situation, your own risk tolerance, your own financial circumstances. Always consult a qualified financial professional before making investment decisions. And let's be honest about the risks, because credibility requires honesty. Silver is volatile, extraordinarily volatile. It can move 10% in a day, in either direction. It has done so before, and it will do so again. A breakout that looks powerful on Wednesday can reverse sharply by Friday if macro conditions shift. The Federal Reserve can surprise markets. Geopolitical events can shift sentiment overnight. A strong dollar move, if risk appetite suddenly surges, can push silver back down before the longer-term thesis plays out. The industrial demand story is real, but it plays out over years, not hours. So when we talk about the next 24 hours being significant, we mean significant as a signal, as a data point, as a moment that may mark the beginning of a larger move, not as a guarantee of where silver will be by this time tomorrow. The smart approach is always the same. Understand the thesis, size your position appropriately, and think in time frames that match the underlying fundamentals. Section 7. The bigger picture. Let's zoom out, way out. Because here's the thing that keeps coming back to me when I look at all of this data together. We are living through a period of genuine economic transformation, the kind that happens maybe once in a generation. The global energy system is being rewired. The global monetary system is being challenged. The global industrial base is being restructured. Every one of those transformations, energy, money, industry, runs directly through silver. There's a reason that throughout human history, through empires rising and falling, through currencies being debased and replaced, through industrial revolutions and technological leaps, silver has retained value, has been sought, has been accumulated by the people who understood what was happening before the crowd did. We are not at the end of silver's story. We may, if the data is telling us what I think it's telling us, be at one of its most important chapters. The solar farms being built today will require silver for decades. The AI infrastructure being laid down right now will need silver for its useful life. The central banks diversifying away from dollars will continue their quiet accumulation of hard assets. The supply deficit will not be resolved quickly, because geology doesn't respond to price signals the way financial markets do. All of this is a slow-moving freight train, and on Wednesday, if what we're seeing in the price action holds, that freight train may have just changed speed. So where does that leave us? Silver just broke out. The macro environment is arguably the most supportive it's been in years for this metal. The fundamentals, supply deficits, industrial demand, monetary dynamics, institutional positioning, are all pointing in the same direction. The next 24 hours will tell us whether this breakout has legs, whether the volume confirms the move, whether the macro backdrop holds, whether the smart money that has been accumulating is right. Most people watching the market today are focused on something else. They're watching tech earnings, they're watching bond yields, they're watching whatever the algorithm feeds them. A small number of people, the ones doing the deeper research, the ones reading the positioning data, the ones understanding the structural shifts in the global economy, are watching silver. The question I'll leave you with is this. In 2 years, when we look back at mid-2026 and ask where the real opportunity was hiding, will silver be one of the answers? I think you already know what I think. Stay alert, stay informed, and as always, do your own research, consult a financial professional, and make decisions that are right for your specific situation. This is not the end of the story. This may be the beginning of the most important chapter. I'll see you in the next one.